Good evening, all. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, and this is the 25th of January, 2023, time just after 6 p.m. Central Time. Now, tomorrow's the big day. We have the live webinar. I'll open the door for it at 12:15. I'll start promptly at 12:30, barring some glitch that we have on computers, but I don't expect that. And we end 20 minutes later, so please make it. I'm not putting up the invites anymore. Enough. We have filled up. All right. So if you try to sneak in, you might be able to get a seat or two, but we're at where I wanted to be. We've got a full house. And it's going to be fun. A lot of questions on metal markets. I can't believe how many in spiders and the ETF. You're getting it all over the place. And obviously, I've switched gears now to the April gold. So before I did that, I told my subscribers that listen to me in the full subscription, make your move, all right? Now you've got to make your move. It's time. So to do that, you just sell if you were in the Feb gold, sell Feb, buy April, boom, you're done. Do it not on the opening. Give the market a chance to do it during the day, not in a super quiet period with enough volume where it makes sense, but you're going to see April's where you want to be. And here we are up again. So the market came back roaring today in the second part of the day, added to that on the opener. You can see most currencies going to the upside, dollar down. One of the things that I thought might happen today was that the Bank of Canada came out and they, on their monetary policy, went up a quarter point. What I didn't expect is for them to go up the quarter point and then announce that that's it. They're going to sit now. There is no more hikes on the table. They want to see the impact of it. They gave reasons as to when they'd come back to the market, but they're not thinking that'll be the case right now. Now, the importance of that is they have been ahead of the United States. So what it's going to immediately create, I believe this is going to be immediate, is people will say, hold on, that means the U.S. might go February and not have to go any further. I don't know that that's the case or not, but the logic is there because people will say each time the Bank of Canada moved, U.S. did something in a very similar fashion. And they went up to 4.5% today on their 25 basis point hike. Be interesting. If that's the case, it should be bearish the dollar, bullish other currencies, not necessarily the Canadian against the dollar, but other currencies that still have a ways to go with that. But as I said, we're talking now, first of all, tomorrow's Thursday. Next Wednesday, a week from today's the FOMC meeting. You got a lot of data coming out. Speaking of the data, let me just show you what I mean by that. This is tomorrow's. You got the first look at the fourth quarter GDP. You got advanced durable goods data. You have the Chicago Federal Reserve National Activity Index. You got jobless claims, you know how important that is. And the Kansas City Fed Manufacturing Composite and Business Activity Indices come out. You have a full day, so don't think it's going to be an easy one. It's going to be rather rough. If you look at the gold market, I thought we could get the market up to challenge into these 1980, let's call it right here, from where it's at up to the 1985 area. I feel pretty good with that. You're at 1949, $40 away on a continuation chart, which means still the February gold is the lead month on that. When we look at April gold, look at how this has just been coming up. And when I put on the swing lines, you get to see, you still have the pattern, higher highs, higher lows. When we put onto that the moving averages, you've got the 18-day over the 200, which is over the 1. To get a real bullish situation long term, you want the 100-day average to cross the 200. That's not going to happen right away. That's going to take a good chunk of February for it to occur. I do believe with this type of slope up, it is going to be pressure to do it. So we'll keep our eye on that. Where's the next target? Look at the Bollinger Band. Look at 1985.50, the old high that I had on that chart. Pretty interesting how they've come together. When we look at momentum, this is called the embedded reading. Now, the embedded readings are so important. If you learn how to work with them, you're learning how to come in on these breaks. There is a technique that I teach. It's not a guessing game. There's an absolute number that comes out. You plot it on your chart, you put in your order, and you hope you get filled. You're out if the red line closes under 79, and I teach you the profit objectives. When we look at the gold-silver ratio, maybe this was a peak just the other day. We got up, as you can see here, let's see if I can bring that up right here. Here it is. We got as high as 82.59 difference. That means you'd need 82.59 ounces of silver and have somebody that's a good friend in a shopping center that you can put it in, and don't steal the cart. You can put it into a cart from your car. Take it over there. He's not going to charge you any commission at all. He's going to ask you for 82.59 ounces of silver to give you 1 ounce of gold in a perfect world. And he's a nice guy. So that is basically what you're looking at there. Now, it has fallen back a little bit, but not enough to say that it's made a peak at this point. When you look at silver, look at the difference of this chart and look at the chart that you have in the gold. Gold keeps running to the upside. The Bollinger Bands went sideways, and the one thing I taught and teach is when that happens, there's a way to observe it and a way that you instantly know, deploy money elsewhere, not here. Everybody is writing me for tomorrow's webinar about silver. I think I had one question about gold. They're all trying to catch the market that didn't move. Big mistake. When you buy, you want to buy the strongest, not the weakest. Do you understand that? It took me such a long time to get that theory. And you try buying a weak one, you think it's going to catch up. It's weak for a reason. In the copper market, still strong, but I think in the copper, what you're waiting on is the giant, China, to come back from the lunar holiday, for traders to get to their desks, start placing orders, factories to reopen, take demand. That's what the market is waiting on. So you got a consolidation. As long as you stay embedded, you're still very much in the bull camp, hoping that you can get to a Bollinger Band. We'll see if that happens. In the platinum, we had a bear market rally, culminated 2 days ago, hitting the 18-day average, just backed off from the market, not tradable. When the swing line is up and you're under the 18-day average, you can get a rally back to it, but markets like to go to that 18-day average to figure out what they're going to do. When we look at the palladium, you kept going to the lower Bollinger Band and bouncing. Now, that's an interesting play in itself. And look at the dollar index, still very much in the bear camp, fully embedded. Do you have the guts to sell the market? I teach you how to do that. Now, I keep talking about the Bollinger Band course, but what we had today and this week have been already a lot of outside days. And outside days are either a continuation pattern or a pattern that the market's taking a break on a trend that's there, and you can measure where it might go. You heard what I just said. You can measure, I think, where it might go. I teach you how to do this in my course called the Outside Day Course. And in this course, you put this together with Bollinger Bands, you got some interesting tools to work with. It gives you an idea of continuation or not. To me, that's it. Some people call that extension. Is it going to extend the rally? Okay, the words are interchangeable. But you're going to learn how these patterns work. I show it to you on an upside, downside, and you'll see them come in. And we're actually showing you here a little bit of how they work, because I do everything in animation to show you, and then I bring you into actual charts. You're going to get stocks, futures, and ETF examples. And as part of the course, we're going to make sure that you have access, if you qualify, and most of you will, to get my complete futures research and or the ETF morning subscriber videos as well. I want you to learn. You get it for 2 weeks. You get at the same time my Linn IRA charts, which I think you'll find to be top end. Anything you're using, I'll put that against, okay? It's pretty darn cool. It's easy. We've got so many cool features in it that I can't even talk about it. You see, when I'm doing the morning videos, I'm showing you features all the time. I helped design it, so I know. And I began designing that, I want to say, in the 80s. I'm dating myself. That's how long it's been around, and it is a mainstay. The Mercantile was using it, in fact, for many, many years, and Chicago Mercantile. IRAEpstein.com if you have questions. To get to the course, you can move. There's a cursor. If you move your cursor up there, you'll see it. Give it a click. It'll take you right to the area. Learn. What more can I tell you? I'm Ira Epstein. You have a great day, and I'll see you tomorrow.